This is a monthly market update. This is what we do every month at Dedale to try to track what is going on in the overall B2B software and technology universe, to understand what is going on in the public markets, which is a part of the world that is important to track, especially these days with a lot happening, but also to get a bit of a view on the dynamics, the earnings as well of the big vendors in the space, and to try to decipher some of the trends that we see happening. We're going to cover what we have seen happening in the month of January, starting first with the first view on market performance. This is a chart that we show you every time. We have reset it since the start of the year. What you can see here is perspective on market performance of our basket of just over 250 B2B software and technology companies listed in the Western world that we track overall as our indice of B2B software that we track against wider indices like S&P 500 and NASDAQ. And on the right-hand side, you can see this basket of companies that is sliced and diced by cluster to have a perspective on which part of the market is performing how. At the top of this, you can see the January performance, and below you can see year-to-date, not relevant now, but it will become interesting to look at this over the next few months to understand 2026 performance. To start with, January, very bad, very negative, one of the worst possible starts for the world of B2B software and technology. And it's not even counting the beginning of Feb numbers that have been on the low side. So you can see that wider indices and S&P NASDAQ are like flattish, so 1.4%, 0.9%. B2B software, unweighted, is down more than 10% during the month. So it's a very big correction of B2B software. If you look at things in a weighted manner by market cap, so the big gorillas, the majors, are weighted a lot more. You can see the decline is less because those companies have been performing better than smaller caps in software, but you can see the decline is felt across the board. Every single cluster of companies, whether it is vertical application, horizontal application, on the infra side as well, are seeing a decline. And what we will comment on what we see happening and some of the reasons behind. What I can say overall is definitely seen as the price to perfection multiples that software was benefiting from in the past decade is past, because it is seen that software is not a risk-free investment type world anymore because of that new big question of AI disruption. However, we do see a lot of overreaction as well, and we might be into one of those. But to try to put facts on this, we will have a look at what that means from a valuation perspective to take a bit of a step back.